Crash or no crash? I think that's the question a lot of people are asking themselves right now when looking at the recent data for the Toronto real estate market. If you're a buyer looking to get into the market, maybe you've really been enjoying the fact that the prices have been dropping, but not liking that the interest rates aren't really helping your payment on a monthly basis. If you're a buyer that bought earlier in the year, you're definitely not liking what's going on. And if you're a homeowner looking to sell, well, I guess it depends on your situation. In today's video, we're going to talk about how we got here. We're going to look at every single month of average sale price and number of sales that have happened here in the city of Toronto, going all the way from January until September. Welcome back to the channel. My name is Tom Storey. I run a real estate team here in the city of Toronto, and I make educational videos about the Toronto real estate market. If you like this video, all I ask is that you give it a big thumbs up. That will help the algorithm show this video to other awesome people like you. And if you want to join our growing community, you can hit that big subscribe button as well. If you get to the end of this video and you think to yourself, hey, you know what? I want to talk to that guy about my real estate goals. You can go into the first link in the description. You can book a buyer call, a seller call, or just a call to chat about the market. Everything we talk about in today's video is going to be free information I'm going to give you access to. So go to torontohousingtracker.com, just put in your email and your phone number, and you'll get access to the data each and every single month. Okay, so what we're going to do in today's video is I'm going to show you 3 different asset classes. We're going to talk about detached properties, the most expensive in Toronto, semi-detached properties, which are typically the pocket that sees a lot of action in terms of demand because there's not a lot of them available. And then we're going to talk about condos. But before I get into every single asset class, I want to show you how we got here, a reminder of the interest rate changes so far in 2022. Because up to March 2nd, the market was absolutely wild. Things were moving at paces that were certainly unsustainable. And we all had a feeling that Bank of Canada was eventually going to put their foot down and say it's time to raise the rates to fight inflation. So here is what happened, right? We had that 25-point jump up on March the 2nd. And then the overnight rate was at 0.50. Then we had a 50-point jump in April, on April the 13th. Then another 50-point jump. So we got up to 1.50 overnight rate. Then on July 13th, that big shocking 1% rate increase from the Bank of Canada's overnight rate, followed by another 75-point increase on September the 7th, which puts us currently at 3.25%. And basically what that means for you, if you're getting a mortgage, if you're getting a fixed mortgage or a variable mortgage rate, because Bank of Canada is really just impacting the variable side, both of them are in and around 5%, where going back to January, February, you probably could have gotten a rate at 2.5%. So the payments are significantly more. What the Bank of Canada has essentially done is decrease purchasing power, and they're trying to do that to fight inflation. Now, we've got 2 more potential dates with maybe more rate hikes. So October the 26th is the next one coming up. That's to be decided. I think general consensus is they might still do something here. It could be 25, could be another 50. Frankly, I have no clue. Only really one person actually knows. And then that December the 7th date. So to my knowledge, I don't think Bank of Canada has ever raised rates in December. I think just mentally, mindset-wise, going into the holidays, they don't want to do that to the economy. But who knows? Like, these last few years have been so wild that really everything is up in the air right now. So we'll see where we get by the end of the year, but that's how we got here. And I've showed you in other videos, even if a home has lost $200,000 in value, going from $1 million to $800,000, still your monthly payments are about the same, but you're going to make that difference up on the down payment and hopefully the land transfer tax and over just the life of the mortgage as well. So let's go over the 3 different asset classes and show you what's happened every single month of this year, starting with detached properties. So detached properties out of the gate in January. And by the way, when I'm going over these numbers for the average sale price, I'm just using the 416 area code, which means Toronto proper. And when we look at number of sales, that's the entire GTA, just to give you an idea. So average sale price in January was just under $1.9 million for a detached home in the city of Toronto. February, we saw the peak, just over $2 million. Then for the next 3 months, March, April, May, again, hovering back to kind of what it was in January. So not a lot of movement from January. Then June hit, then July hit, and then August hit, and now look at September. So the lowest month so far still was July, We had a jump up there in August compared to July, but then jump back down in September. And right now we're sitting at just under $1.6 million, where we started the year almost at $1.9 million. So if you are looking for a quote unquote perceived discount or deal, detached properties in the city of Toronto have come down the most in terms of actual price that you are paying for them. Just total dollar amount, they have come down the most because they were the most expensive. So I don't think this is really surprising to anybody. The detached pockets right now, although the prices are not back, you're not seeing a ton of inventory, so multiple offers are coming back, but by no means are they going anywhere where they were earlier in the year. So yeah, pretty much every single gain from detached properties has been wiped out. And now we're back to like mid to late last year prices on detached properties. So if you owned a house detached coming into this year, anything you've gained have been wiped out, and then some so far already in 2022. Now let's look at semi-detached properties. They're very interesting to me because semi-detached properties, in terms of freehold properties, other than a freehold townhouse, is a lot of people want these because it's that step up from the bigger condo, but you don't want to buy a detached house yet because you can't afford it. So semi-detached properties to start the year in January were trading about $1.5 million. The peak of the market for semis was March at 1.544, and then you can see the downward trends start. So May we had 1.426. June, we had 1.3. July, we had 1.267. Then August, we really had the bottom, so far at least, of the semi market. And then we jumped up a little bit in September. Now, semi-detached sales, because there is less properties selling, there's possibilities that the fluctuation on a month-to-month basis could be greater because we're using average price here. So if there was like a highly renovated semi-attached house in Trinity Bellwoods that sold for $4 million, it could somewhat skew these numbers, but there's still over 500 sales happening. So it's not like we're dealing for 10 or 15 sales across the board. This is still a lot of sales happening in a pretty big city. Now, the last one I want to show you is condominiums. Condominiums, what is going on with the condo market? So it looks so far like condos are basically flat. So we started the year at about $760,000, and then we jumped up to $822,000. Then you had $831,000 in March. Now, March was the peak for the condominium market with over 3,000 transactions taking place. That was the only month this year where we had over 3,000 transactions. Now, something to keep in mind here is if you look at that sale price in March at $831,000 with over 3,100 transactions, then go all the way September where your sale price was basically $770,000. But transactions wise, we had like a third of the transactions happen. So not only are the prices down, but the amount of units that are moving are down. And that's how we're building inventory right now in the condo market. So you started the year at about $760,000. We are currently at about $770,000. Now, I guess what you're thinking is, okay, well, what does this mean to you? Okay, well, let's first talk about it as if you were a buyer and you want to get a perceived deal on a property based on where it was earlier in the year. Well, if condos are the same price, average price as they were to begin the year, buying a condo just costs you more now because the prices haven't dropped off a lot, but your payment has gone way up based on the interest rates. If we go back to semi-detached properties, let's say you started the year at 1.5 and you're down to 1.2. That to me is an opportunity where your payments still may be similar, but your purchase price is going to be $250,000, $300,000 lower. And then we look at detached, where personally I think this is the biggest opportunity. If the peak of the market was $2 million and we're right now at $1.6 million, that's a $400,000 to $500,000 difference if you're looking at peak of the market till now. And I think even with the interest rates going up, your payment should be lower. But there you go. That's my update for you on what's actually happening today. Is it a crash? Is it not a crash? The truth is, it's way too early to know. We're going to have to see how this plays out moving forward. What I do know is I still am seeing a little bit of issues with inventory in certain pockets of the city. But I think early 2023 will be super interesting to see who comes to the market, who the buyers are, because regardless of everything that's happening, some people just need to move. But in terms of the news headlines moving forward, I don't think you're going to see a lot of growth in the market in terms of prices, at least for the next, 4 to 6 months. And I could be totally wrong. You never know. But if interest rates continue to go up, I don't expect prices to go up. But saying all that, I own real estate. I hold it long term. I don't really care what's happening right now because I'm looking a decade, 15, 20 years into the future and how my properties could potentially set me up for retirement. Thank you so much for watching this video. As always, my name is Tom Storey, and remember, home is where your story begins. If you like this video, please consider subscribing to the channel. You can learn more about the Storey Team at storeyteam.ca. We also have a weekly podcast called The Tom Storey Show, with new episodes each Sunday. If you'd like to book a call directly with Tom, you can do that via the first link in the description.